Intel and Micron are disappointing semiconductor stock investors in 2024. While the industry is thriving on the back of rising effectiveness of AI and the enthusiasm surrounding Nvidia stock, Intel stock price is down meaningfully in 2024 and Micron is flat. Understandably, investors are interested in these semiconductor stocks because finding cheap stocks in this industry is rare given the factors I just mentioned. For investors interested in these semiconductor stocks, which one is better, Intel or Micron? I'll answer that question in this video by comparing these two beaten down stocks on critical financial metrics, including revenue, profit, cash flow, and valuation to determine which one I think is the better investment today. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. And as I mentioned at the top of the video, the stock prices for these two stocks have disappointed. Micron trading at $87 per share is about where it started the year at, but in the first part of the year, the stock price was up closer to $140 per share, and it's drifted lower ever since reaching that peak. Intel, meanwhile, has just been trending downward all year long with little to no bounces in the year. Intel stock price started the year closer to $50 per share. It's now trading at just $21 per share, and Intel, for one, has interested many stock market investors, being the largest semiconductor stock manufacturing company in the United States. Being down by this much and in so much trouble is really drawing a lot of interest from investors and politicians alike. Revenue has been trending downward for Intel, $55 billion in the most recent trailing 12-month period. That's down from closer to $80 billion in 2020 and 2021. Micron Technology, meanwhile, hasn't experienced a similar downturn like Intel. Micron's revenue decreases have been more cyclical than the losses of market share like Intel. Intel losing market share to the likes of Taiwan Semiconductor Manufacturing, as that company has increased its share of fabrication of semiconductor chips, as Intel has also lost market share to Nvidia in data centers, as these data centers have been shifting more towards GPU-based data centers instead of the former CPU-based data centers where Intel thrived. However, Intel is building massive expansions to its business on both sides, both in the foundry side of the business and in the branded Intel side of the business. Intel is hoping that with these billions of investments in technology and manufacturing expansion, the company can reclaim some lost market share. The timing is perfect because the US government is incentivizing the building of manufacturing and expansion of manufacturing of semiconductors in the United States, which Micron Technology is also capitalizing on. Micron Technology, its downturn was more cyclical. The company sold a lot of its components to electronic device makers in 2019 and 2020 and 2021. But as economies reopened, people were buying fewer electronics, and there was an inventory glut of the type of memory and storage products that Micron Technology sells. Still, management expects 2025 to be a robust year and for the next 5 years to be extremely attractive in terms of growth, double digits, both in terms of the memory part of its business and the storage part of its business. Also, I mentioned Micron benefiting from government incentives, getting billions of dollars to expand its manufacturing here in the United States. That will increase capacity, and the rising effectiveness of AI means each of these devices, like smartphones and tablets and laptops and personal computers, will need more RAM and more memory to compute and harness those technologies. So excellent prospects here for the next 5 years for Micron Technology. For Intel, it's a bit of a mixed prospect environment. Revenue is likely to recover as the company's manufacturing expansions come online. The company is likely to regain some market share as a result of its massive investments in the business over the last few years, although the magnitude of that recovery remains uncertain. Now, those investments have weighed down on profitability for Micron and Intel, but you could see at their peaks here, they are very lucrative businesses. At their peak cyclical times, Micron generated $15 billion in operating income, while Intel generated close to $25 billion in operating income. In the recent year and a half or so, you saw this big decline, and that was due to those massive investments for Micron and Intel, and partly a loss of some market share for Intel. Cash flow from operations, a similar story. During the good times, these companies generate massive amounts of cash flow, close to $20 billion for Micron Technology, close to $40 billion for Intel, and again, it's down due to those investments the companies made, but still, Micron is recovering from that bottom already. $5.35 billion in trailing 12-month cash flow from operations, $11.5 billion from Intel in the most recent trailing 12-month period. Micron Technology, its cash flow from operations, more likely to be positive over the next 12 months, a solid recovery, while Intel, more likely to continue to be difficult, as evidenced by the company's pause of its dividend. When a company pauses its dividend, it's a telltale sign that cash is a concern. They're trying to conserve cash because they don't know if they're going to have robust amounts of cash over the next 12 months. They've already stretched themselves, Intel has, in terms of borrowing so that they can implement these expansions, and now they're pausing the dividend to conserve cash. And there's growing evidence now that Intel may have stretched itself too far with all of these investments in the business. They're overreacting essentially over the previous 5 years to what they did in the first 5 years of the 2010s. They underinvested in the business and they lost competitive advantages and they lost market share. And now they're trying to overreact by overinvesting in the business. And it looks like they stretched a little too much. So now they're likely to recalibrate backwards a little bit to have a more balanced approach in their investment in the business. And finally, valuation. I chose to compare these two on the forward price to earnings ratio. Intel is trading at a forward PE of 17.5, while Micron is trading at a forward PE of 7. So in the next 12 to 24 months, I like Micron's prospects better than Intel, and Micron is trading at a fraction of the valuation of Intel. So if I were to pick one of these two semiconductor stocks to buy today, I would pick Micron Technology as my favorite of these two. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.